In this session, let us understand what is fund flow analysis. Have a look at this. Traditionally, balance sheet and profit and loss statements are prepared, we know. This balance sheet would communicate what is the financial position as on a particular date, and this profit and loss statement would communicate what is the book profits that are generated during the year. But the problem here is both the statements, that is balance sheet and P&L, do not communicate directly as to what is the movement in sources and uses of funds. See, in business, funds will be mobilized from various sources and it will be used for various purposes. But what is the movement? How much funds have been mobilized? How much funds have been utilized during the year? That movement will not be visible, will not be communicated by the financial statements. So we go for a supplementary statement called fund flow statement. Understand, this is not a mandatory document like statement of profit and loss, balance sheet, but this statement is prepared mainly to understand the movement of funds. Let's have a look at this. Why movement in sources and use of funds are important? If your business carries more long-term funds, it has a benefit. That is, it will have better liquidity position. When I say liquidity, it is the ability to meet your short-term obligation and expenses without any difficulty, and that is possible only if your business has more long-term funds. But if your business has more short-term funds, then it is going to affect the liquidity. What is the problem here? What is the problem if business has more short-term funds? Understand, these short-term funds are repayable in short time period, and your business should keep on be generating resources in short-term period. If there is going to be a slight mismatch between raising the funds and meeting the payments on time, then it will affect liquidity position of the business, and that's why we say if a business is going to have more short-term funds, then it is going to affect the liquidity of the business. Okay, let me summarize this. More long-term funds will improve long-term stability of the business, but if there is going to be more short-term funds, then this would affect the stability and solvency of the business, because these funds are repayable in very short period. So for this reason, we should understand the nature of sources and uses of funds, especially with reference to timing. When I say with regard to timing of the funds, it means funds have to be classified as long-term fund, short-term fund, because only those businesses which has more of long-term funds will be able to carry out their operations peacefully. The businesses which are carrying lots of short-term funds will be always under liquidity pressure. So it's from this context fund flow statement analysis becomes very crucial. So how we are going to analyze in depth, we'll take up in the following sessions, and this session was just an introduction.